Hi guys, so welcome to this video, and in this video I'll be talking about something that has really been an issue for my PhD students, right, and a lot of you, and that's the issue of daily liquidity, right? So some people always bothered. Okay, the market is bullish, but I still keep taking losses, right? Even though I was buying, or the market is bearish, and I still keep taking losses, even though I was going on shorts, right? So this video talking about previous day liquidity to help you to know when to stay out of the market and to know when to frame your trade setup, right? So let us go into the minutes of the matter. So now on a daily candle, right? This is a daily candle now, right? So we have the higher wick, the open and the body and all of that, right? So the things to notice that on a daily candle, we have what we call the previous daily high. That is what the high of the candle. So you can level that as what your previous daily high. That is what the high of what the candle, right? Why the previous daily low, so the low of the candle, right? There's a PDL, previous daily low, while the PDH, so the previous daily high, right? So this is what it is on the daily time frame, right? So now, what this implies that if the market is bullish, note this, if the market is bullish, right, the market would do something like this. It would possibly make a low, right, and then do what? Go for the previous daily high, right? So the previous daily high is the target for a bullish market. So the previous daily high is the target for what? The target for what? A bullish market. That means once price takes out the previous daily high, then you can anticipate reversals. So I have seen traders where the previous daily high is clearly taken and are looking for buy opportunities. And what happened? The market started to start to reverse on them. Why? Because the intraday target was already taken. So market is beyond market structure, bullish, higher, high, higher. You have to take into cognizance the liquidity pools present, right? When the liquidity pool has been taken, then the likelihood of price going to that direction of the liquidity pool is now very less. So in this situation now, the market has done what? It's opened somewhere around there, right? It's opened somewhere around there and then formed this low, right? And then low do what? Gravitated what? Towards the previous daily high. So once this is done, to me, the market has fulfilled its objective for the day. So even if I want to take this trade now, I'm looking out for sell opportunities like reversals, and it's not compulsory. If there's no clear sell reversal, then I will stay to the trade. So what I'm saying is that if the market is bullish, you want to be buying and targeting what the previous daily high and any liquidity above the previous daily high, right? You don't want to be buying after price has taken out the previous daily high, right? You want to be buying into the previous daily high or selling after the previous daily high has been captured. And the reverse is the case when you're bearish. So if your market is bearish on the higher time frame, maybe your market is a very serious bearish market, what do? You want to see price go forward the previous daily low. So market can something like this, open and then do what? Expand to the downside. So maybe kind of weak. You have to open, create a kind of weak and then do what? Expand to the downside. And what do you do in this situation? Right? Either you look for sales to the PDL or you do what? You wait for the market to take out the previous daily low and then look for the reversal. So either you're selling into the previous daily low or you're buying the reversal. Right? Those are the two things that you're doing. You're selling into the previous daily low or you're buying the reversal. That is basically the two things you're doing when it comes to this, right? Now, this is one way to avoid the traps that come with um the market reversing on you, your market taking you out if you do the trend, you're following the trend, right? So this is going to really save if you are intraday trader, right? So you're going to go into real charts after now. So let us quickly head over to real charts, and then I can drive home this point more vividly. So let's go to Euro USD. I'm going to be using EU for this example, and then the daily charts. All right. So let's make it visible. Now, watch something. Watch that. Just watch this. Look at the charts very carefully. Because that right from when the market became bearish, what happened? Each daily candle that opened did what? it went for the previous daily low. Watch this very carefully. Each candle that opened went for what? The previous daily low, right? The same thing, the market opened, previous daily low. Market did the same thing, previous daily low, the same thing, the previous daily low, the same thing here. This was the only candle that went off. This one did the same thing, opened, although it took out the previous daily high first, but then went for the previous daily low. So you can see that all the bearish candles we are targeting was the previous daily low, right? The same thing here, previous daily low, the same previous daily low. You can see how the market did that consecutively, right? So if you come to your chart and you see if you're bullish or you're bearish now, and it starts price has already taken on the previous daily low, what do? You stay out of the market or you look for what? Buy reversals. So the market is heavy bearish, you just stay out of the market, right? You've seen that that's taken on towards. If maybe I came to the chart and I saw the market take out previous daily low, there, would I be trying to sell this anymore? No. I would wait for what the next day, right? Or looking for what? Buy reversals. So that's basically what we are doing on the higher time frame. Like look at today now. Look at today. What happened? The market was there, but something happened very funny today. Look at this. If you come to the 15 minutes time frame, this was actually a trade that my students took a loss on. That's why I'm actually explaining this. Right. So now let's go into the day. Now look at the day started. The day started where was the day? It was Friday. Okay. Now watch something. The market what it was the previous day low, right? It was a low of the previous day, sorry around there. That was a low. Let's just go to the daily chart and mark it. Let's go to the daily and mark the previous daily low, so I won't make a mistake on this. So here was our previous daily low. Looking at today's price action, today was NFP. So what do you have here? Previous daily low, right? Let me just extend that in time. Right. Well, let me use the black line to highlight it. Right, so that was the previous daily low. So go to the 15 minutes time frame now. You can know your price level. Right, so this was the previous daily low. This was it. So around it. What happened? The market was what share? What happened there? The market was went below the previous daily low, right? And if you tried to sell this market at this point here, you're taking a loss, right? The market can see the market bought very crazily after that happened, right? You can see when the market took us previous daily low. If you're trying to sell, then you're taking serious losses. Although this move was sponsored by NFP, this was an NFP move, but before the NFP move, you can see the market was good all these sales. So maybe maybe you are looking to sell it, maybe you are seeing a kind of other block inside there, right? You saw another block inside there. Maybe you saw this other block, I don't know. You saw any of all these things, right? Possibly looking for a sell opportunities, would have likely taken what? A loss, right? So even we targeted here, maybe you're looking at this last demand supply zone, any of this, you're taking what? A loss, because why? The market was not having it. So this was an NFP move. That was the reason why we saw price still sell. Right? But on a very real situation, when market takes out previously low, right? You don't want to be taking on what more sell because the market might reverse on you, right? So see how this thing has been occurring, right? That's how it occurs on repeat. So whenever you enter a new day, depending on the structure of the market, if you're bullish, you simply go to what? A bullish, you mark the high of the previous day and the low of the previous day. And when that happens, you can only look for what? Your opportunities. So let's look at the previous day. I don't like to use days. Let's look at the day before, that is yesterday, right? So market did what? Let's take a very good look at this. Market did what? Look at this liquidity there. And I was kind of a 1 hour break or structure above it. And so now let's mark the day. And let's look at this particular day. Now we'll just use the replay tool and take it to this day, right? So look at this inducement, right? And then I was anticipating bearish price action. So now we have marked the previous daily low. Let's go to the lower time frame now to see what happened or what transpired. All right, so now we have remember that we are bearish, right? So now what happened? Okay, let's play the bits to see what happened. All right. So the market started, giving some kind of beautiful movement. Let's make this a bit faster. All right, let's make this a bit faster. All right, all right. So you can see that price took out what the inducement, and somewhere around there, the market started making a series of lows. Right, you took out this structural low. Right, the market um, made this low and then failed to make a new high. So this was an example of what we call a failure swing. The market made a failure swing here and then broke this low. Because the market should, if market actually wants to be buy, you should make higher high, higher low, and then continue going on to the downside, right? So to the upside, right? What happened? The market made a high, made a low, failed to make a high, and then broke this low. So this was a kind of a shift in market structure right there. The market went below this swing below, which failed to make a high, and actually a break there. And what happened? This was Thursday. This was Thursday. Market just opened, ran above, and what happened? It went from the low of the previous day. Right, and watch what happened. Basic price took out the low of the previous day. Watch what happened. So watch. So it's said the market said find it difficult to continue moving down. Why? Because took out the previous daily low. So can you see that? So when the market took out the previous daily low, you can see that the market find it difficult to go lower than that. Instead, it did what? It broke back to the upside, right? So your target for a day when your bearish was the low of the previous day, while if your bullish is the high of the previous day. And whenever the high is taken and you're bullish, then you're looking for what reversals. Right. So if maybe you're looking for reversal buys here, because the market is taken on the previous day low, that maybe caught some kind of reversals, maybe somewhere around there, had some kind of buys, bought from here. Market bought about 15 or so of thereabouts. So the 15 pips or thereabouts. So that was most likely what would have been doing on this, right? So you can see how this is happening on repeat. Let's also look at another pair. Let's look at the GBP. Once you guys will get it, once you guys will get this very well. I look at the daily charts. Let me take this out. I think I was teaching someone with this. So look at the daily charts very carefully. Now watch this. You can see how the market was bullish. All the previous daily highs were taken, right? You can see how the market was breaking highs, taking out previous daily highs, open, run a high, open, run a high. And in rare cases, this one will open around the low first before running the high. And that is still acceptable. Why did they run the low? Because you want to do what? Tap into this imbalance. That's why the market ran the low. The imbalance created the so market came to run through that imbalance. So that's actually a very beautiful buy. Right? If you remember you're looking at the structure of the market. If you're bullish and market should instead of taking PGH the high first and market decides to go for the low, that is even better because now you have what a more better probable what buy opportunity because market reverses below what a previous daily low. So now this was a bullish market. We had this order block right? Six other block right here. And we have this imbalance, right? So that's a bit for market to run the low, give you the buy, and then what you have sent price above, right? So that's how high that's been on liquid. Look at the same thing here. As the market broke this bullish candle, when the market breaks a bullish candle, it creates what we call a sell program. So market broke this bullish candle here, right? Broke the bullish candle here, creating the sell program. And means what happened? Market doing the same thing, taking out what lows. So can you see how the market has opened and taken out what lows, open, take out low, and then that's what market has been doing. Even today, it took out what took out what a low. So you can see that the market is not taking out highs. That's how to know the market is bearish. When the market is bearish, it goes for lows, lows upon lows, and upon lows. That is its target. And once that low is taken, then you can stay out of the market because you can anticipate what a reversal. Right, let's just look at the intraday price action of today. Right, today is Friday, NFP Friday. Okay. So where was Thursday? Let us quickly mark the previous daily low from the daily charts and don't have to look for it, right? So now we have our previous daily low here, right? So we want to mark and see what happened on the intraday perspective, right? So what happened there? Because you have that previous those are Thursday low. Oh, yeah. So that Thursday low, right here. Minus the Thursday low. What happened? This was Friday. Market opened somewhere around there, right? Market open somewhere around there. It was open price of the market. Market open somewhere around there. Right. Market open somewhere around there. Right. What happened? Market was run above. Right. Made some kind of liquidity sweep, taking out all this liquidity here to the upside. See all this liquidity captured. Right. So all this liquidity was captured there, and then market broke this low, then broke another low, and finally was the previous day. And what happened? Immediately the market took at the previous day. Can you see this explosive buy momentum? Right? So that's what happens when a previous day is taken. So maybe if you caught some buys there, you would have made about this was 490, 490. Wow, this was about 80 pips. So if you caught that, you made about 80 pips. 80 pips. Right? It's about 75 pips or 80 pips. At present, 80 pips. So if you bought below or the previous below for the reversal, you have caught this amazing buy to the upside. And yeah, possibly I'm targeting this quarter block and all these supplies. If you're buying down there, this would have been your target, this supplies, because that is where sellers got involved in the market. So if you're buying, you target tend to take profits just above the next area of resistance to your market. So if you're bearish, you want to be looking at for where sellers got in and you want to take your profit before those areas, right? Because the market can tend to reverse to reverse or stall around those areas. All right. So you can see how the market is booked very nicely, right? So that is just basically how to do it. So if you're bearish, remember what I told you, you're targeting the previous daily low as your target. And once price takes the previous daily low, then you're out of your sell trades, right? You're out of the market. You're not trying to sell anymore. Wait for the market to do what? To give a reversal, or you wait for the next day. And preferably, if the market is very, very heavy bearish, or the market is very heavy trendy, it's best to wait for the next day and then target the previous daily low. If your instance is taken, wait for the next day and do the same thing, right? So I hope this video helps you. I want you guys to back test on this information. Let us just do one last back test on this. Let's just do one last one. That's one. I want to look at what my market was very clear bearish. All right, so let's just put our eye in this example when my market was bullish, right? Let's just put our eye here. Let's also look at this example here. What happened there? Just this bullish example, right? We're using bearish so much. All right, so let's go to the lower. Let's just mark the low of the high. We are bullish, right? So we're looking at the high of the previous day, right? That's our target for the day. So go to the 15 minutes time frame now to see what happened. So we had that imbalance down there. What happened? The market opened, you know, took at the low first, right? And tapped into that imbalance. And that's what I did. So you can see, you guys took at the low and tapped into that imbalance, very, very high. So we had the low of the previous day, which was on a Tuesday. So the low was from there. Right. So market took out the low, tapped into the imbalance. Right. I told you that if you're bullish, that the market tends to reverse for buys below the previous daily low. So it was the previous daily low of this day. It was the low, and the low of what that particular day, right? Which was on a Monday, and this was the high of it, right? So the high, and it was the weekend high, the Monday and weekend high, right? So the Monday candle opened there. That was the high of the candle, and this was the low of the candle, right? So what happened? The market was it took out the low first, and if you are looking for entries there, you would have got some entry inside there, maybe or lower time for entry. And what happened? We went below the high. So that can be your trade. So when market takes the high, automatically you're looking towards take off your positions, a good chunk and possibly exit it because the market might tend to reverse once that previous daily high is taken. You can see how the market said you're giving these rejections after it took out the previous daily high, right? So you can see that. See, can you see that? The market started stalling when it took out the previous daily high. So that's basically how you do these things, right? So let's go back to the daily chart now and see. So that is basically how these things are done. Right, that's basically how it's done. Right. So let's see. Right, the same thing happened the next day. Let's look at this in the next day. The next day is here. I want you guys to get this in the row. So here's the next day. Let's look at this day. Right, the same thing also occurred. Although that was a very, very quick walk. So 15 minutes time frame will do us justice. So this was Tuesday. Right, so that's Tuesday's high. Let's mark Tuesday's high again. So this was Tuesday's high. Right. What happened? Let's see. What happened? So market first of all it went down and then gave us explosive move to the upside. You can see how this is occur. So if you're bullish on the targeting was high, so you can see the market played around finally was one for that high. Alright, one for that high in next day. Right, I want to be sure I'm doing this correctly. I want to be sure I'm doing this correctly. Yeah, I am. So let's take this out. I'll go back to the 2 minutes time frame. Alright. So I see it happen. Explosive one to the upside. Right. So that is it. Right. I think the time on this particular broker is right. So that's basically it. So the high from the previous day, the market was sliced through it rather handsomely, right? So that's basically how these things occur. The cause of repeats or repeats or repeats or repeat or repeats. So that's basically it. Right. So I wish that you guys would do what to backtest this information and um, see how this is occur. It will really help your trading to know when to stay out of the markets, right? It will really help you to know when to stay out of the market because now you know what you're looking out for to stay out of the markets, right? You know when the market would likely not continue buying. You know all those things. Look at this bullish example as well. And see this daily high at the market was bullish. So what happened? We're looking at our previous daily highs, our overall targets. So I have a previous daily high, then we can now go to the lower time frame to see what happened. So this was actually a Tuesday's high. What happened? I think markets what happened? Wicked through a bit. That is not clean enough, and then was sliced to the high, right? So that's basically it. So that is it. So when market takes out the high, then your trade idea is invalidated, right? So you don't have any other. One market take this high now. You're not looking to take any other trade in this market, right? So if it's very bullish, but if you can see bearish confirmation, then you can look for reversals, right? So this information is very crucial for your trading, right? So I didn't talk about lower time frame trades because I've taught that in my paid community. So if you want to learn how to use lower time frames to take these trades, do what to join the paid mentorship platform where we'll teach you the techniques in which you can use lower time frames to catch all these trade ideas. And if this makes sense to you, just do what to drop comments in the comment section. And if you have any questions or any contributions, suggestions upon this video, just do what to drop it in the comment section and I'll be willing to reply as soon as I see them. All right, so see you guys in the next video.